morning, ladies and gentlemen. Again, a very warm welcome to all of you on Business Today Television. As we step into the final and last fortnight of 2025, this is a time to take stock of assets and assets that have delivered supernormal returns and what looks good for 2026. As we all know, it's been a complete write-off for equities as far as Dalal Street is concerned, but there is one space that has shown very brightly, and that's the metals space. Even if you look at the CNX metal index on the National Stock Exchange, that itself is up 40% from a low of 7754 hit in April, all the way up to 10,650, which we saw in October, still consolidating near record levels. And look at silver, look at gold, look at copper, look at aluminium, look at any metal, and you've made supernormal money. To discuss this and a lot more, we are joined by Mr. Kunal Shah, the head of Commodities Research and Trading at Nirmal Bang Securities, one of the finest voices on commodities over the last 2 decades, and a person who has created immense wealth for all his clients. Namaste Kunal ji, and a very warm welcome to you. Silver 2 lakhs, gold 1 lakh 40, copper at a record high, and of course a lot of gains coming in the aluminium space as well. 2025 has been a sterling year for commodities. Your recollections?
Yeah, it has been a phenomenal year where we've seen all the commodities, especially the PGM precious metals, doing exceedingly well. Silver giving you 125% return, gold giving you 65% of return. This is not something what I've seen since last 20 years. So one-off phenomenon and very rare. So it's more to do with the hard asset play, with the kind of debt Western central bankers have created over last 4-5 years, and now they are finding it difficult to even service this debt. Forget about the rollover. So now, considering all of these things, dollar depreciation, global uncertainties, China's involution policies, so this all have made metals and commodities one of the most preferred investment in 2025, and we believe that the kind of return what we saw may not be replicated in the year 2026, but still we are in a structural trend as far as broader commodity as an asset class is concerned.
Okay, we'll discuss the returns a little later, but one positive thing also that happened for the commodities space is the record low on the rupee, especially in the last 2 months when we've seen sharp cuts coming into the currency. While this is negative for the broader economy, but metals, especially precious metals, have taken a shine to the rupee. How much of this gain that you see in precious metals is because of the record low on the rupee, and how much from actual buying?
I think it's more of a 1.5-2% upside in the rupee's weakness from 89 to 91. Okay, so you would not say more than 2% weakness is because of the 2% weakness in rupee has caused the gold and silver to go up by 2%. But I believe that the rupee story is a very different one. RBI is not intervening, and because of the US tariffs, we have seen outflow, capital outflow, export taking a hit. So I think not surprising me. The only thing which is surprising is that India-US deal is not taking place. So that's one of the reason why rupee is taking a beat, and because of that, gold and silver and other commodities also have been moving up on the domestic bourses.
Okay, fair point. Now let's look at what has been the best performing metal, which is silver. We briefly saw 2 lakh rupees per kilo on silver, and this is a very strong return that has come in for this particular asset. Phenomenal rallies in the price of silver, which is now year to date up more than 100%, 114. What beyond this, Kunalji, is this largely speculative demand, or was this based on some fundamentals? There is a theory that is going in the market, which is debasement, which is the weakness in the dollar, the weakness in currencies, a lot of geopolitical risk, and therefore both gold and silver being store of value and also providing relief from other asset classes. Which side of the equation do you stand?
Okay, a very nice question, and I would like to answer this by elaborating it. So, debasement is one of the reason. The reason why silver rose the way it rose was because of the shortages. So, from last 5 years, there are no significant investment done to the mining sector, where we have not seen any meaningful demand supply side growth in most of these metals, may it be silver, may it be gold, may it be copper. So, the supply side, the commodity which have done the best in 2025 are the ones which are going through a shortage and deficits. So number one for silver, number two copper. So these are the commodities where we've seen shortages developing because of the drop in production from last 4-5 years, and big deficits have been created around these commodities, and that's the reason they have risen by 120%. So there is a thumb rule for commodity. Whenever there are shortages, the quantum of big shortages, the quantum of jump is something you cannot predict, and that is what has happened to silver. So coming to the demand side from the BRICS and the Asia looks quite positive, and new age demand from electric cars or data centers, and these are the demands which were not earlier there. Now these demands are accounting for the good demand growth across the globe also. So until we see a major uptick in the supply, commodities are going to remain in a structural bull run. And then coming to the other people who wants to diversify their wealth into hard assets, these are the people who are seen buying commodities. So combination of these two, looking at the way the global G7 economy, central banks and their fiscal status, everyone is worried over there, and people are buying gold and other precious metals left, right, center, because they are afraidful of a scenario that something really bad can happen, and in order to protect, in order to hedge, they have to buy gold and silver.
Okay, fair point. How much, because you have deep links in the physical market of gold and silver, what are jewelers telling you where this ornamental demand comes in? From what is our understanding, 2025 has been characterized by central bank buying in precious metals, as also a lot of financial asset buying of precious metals. What are the jewelers telling you?
Okay, the jewelers are not having a great time in terms of their sales. Their sales have dropped by 25%. But the better part for them is the value of the material what they've bought has increased substantially. So if somebody is unhedged as far as their inventory is concerned, they would have made a good gain on their inventory. But if somebody is hedged, then they may have an issue of cash flow because they have to pay heavy MTM losses. Second, because of the higher prices, the demand side has been waning and not picking up the way it used to. So they are so jewelers in particular, each and every person with this kind of upside what we have seen have their own problems, and the only good thing which happened to them, that they are sitting on a huge appreciation on their inventory provided they were unhedged.
Okay, but I know many jewelers personally, all of them are in pain. I mean, most of the buying that has happened is mainly on account of people buying gold ETFs, and physical purchases are limited, I think, to large institutions, unless you're buying for a marriage or some other peculiar reason that you wish to not avoid. Nevertheless, Now, your customers and your clients are a very happy lot on the commodity side, Kunalji. What are you telling them for 2026, especially in regard to silver and gold?
I think the first thing I'm telling them is to taper down their expectation of returns from them. Number one, you can be in them. The global macroeconomic environment is such that gold and silver still will continue to remain a strategic asset class going forward. But your return expectation should be very moderate going forward in 2026. We will not see 100%. We will not see this kind of return. So around 10 to 15% or 20% return is something very realistic that can happen. But expecting it to again go by 50-100%, that looks very difficult.
Kunalji, now let's look at the industrial side of the equation, which is copper and aluminium. How are you looking at copper in particular? This is the reason why I ask is that a lot of copper-based stocks on the equity side have started to move up in sympathy with the metal. What is the outlook for 2026 on copper and the reasons thereof?
Okay, so the outlook is very bullish. In near term, we may see some headwinds because of the Japanese yen carry trade unwinding, but in a longer term, we are going to see stimulus by US, QE by US, followed by in China. Most important thing, China, like I said before, is adopting involution policy. Under that, the excess smelting capacity of red metal is likely to get curtailed, and that remains my prime reason. So the concentrate market of copper is tight, and now the refined market, if China cuts down their smelting capacity, will also be tight. So net net, it looks to be on the structural upside, and even I will not be surprised that in 2026 another 20% rally after 30% rally what we saw this year, another 20% rally cannot be ruled out in copper.
Okay, and this is again the shortfall because of mining. What is the CFTC website telling you in terms of copper longs?
I would say CFTC lately I haven't seen, but broadly, like I said, Mexico is facing huge problem in retrieving the ores. Chile, Peru, Mexico, all these countries who are the copper producers, the mines have become old over there, and the ores which are coming out of those mines, the quality is quite substandard. So this is the problem on the supply side, and demand side is looking very bright.
Okay, fair point. So 20% uptick possible in 2026 for copper, a very muted 10-15% on gold and silver. Kunalji, I am telling you, your clients and customers have become very greedy. If you were to tell any equity holder, especially in the mid cap and the small cap space, यार बस 20% मिलेगा 2026 में 15% मिलेगा इसी में खुश हो जाओ, लोग आपके पैर धो के पानी पीते.
What has happened is that the commodity frenzy have started from the start of the year, and during the end of the year, it has exaggerated to a level where we are seeing no respite in this upside. So I would be a little cautious in terms of buying it at a higher elevated rate. I would recommend investors who are watching your show, wait for correction, wait for dip. I'm not saying fundamentals are bearish, but it's highly overbought. Anytime if there is a correction, you should not be taken off guard. So I would say corrections can come, but again, with the more liquidity coming in, more rate cuts are coming in, the downside will not be as big one as people may be anticipating.
Okay, fair point. We haven't talked much about crude oil. This has been one of those commodities which really hasn't given any positive feedback for 2025. How do you think 2026 will pan out for crude oil?
So I'm bullish on crude oil. From the very simple reason, it is very big consensus developing that oil prices are not going to go up. So that is one of the first reason, which is the trigger for me to remain bullish. Second, all the major economies, they've run out of their strategic petroleum reserves, so they have to refill it. So that buying is going to come, and if oil goes below $55, a lot of shale oil producers from US are going to cut down their production. So market will rebalance itself in oil in 2026. I'm optimistic. 5,050, 5,100, good levels to accumulate. You will have to roll over for 1 or 2 months or 3 months, and then the returns will start coming in crude oil.
Okay, so that's a modest expectations. Within soft commodities, maybe sugar, maybe coffee, anything on the food side of commodities on the soft side that looks good for a good bullish uptick in 2026, or are you focused only on metals?
I'm only focused on metals, Shilbhai.
Oh. On that wonderful note, Kunalji, here's wishing you a great 2026. 2025 has, by all accounts, been, I think, thank you so much, and we hope to remain in touch every week, every fortnight to take a metals check, a commodities check in 2026 from Kunal. Thank you for watching. Nirmal Bang Securities.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell.